The Houston housing market has collapsed. November 2025. According to data from the Houston Association of Realtors, homes are selling at 92.2% of their average sale price. This is the lowest rate recorded by HAR since 2001. Buyers are offering and getting accepted at 10% below asking price. The median home price has fallen to $325,000, declining for 8 months. Houston has the most homes on the market among major U.S. cities. There are 36,620 single-family homes for sale, a 21% increase from last year. And Governor Greg Abbott? He boasted about signing housing affordability laws in August 2025, but ignored the reality of the insurance crisis in Houston. Why has Houston become a buyer's market, yet no one can afford to buy a home? How did insurance premiums swallow Abbott's tax cuts? What's behind this dramatic transformation? Houston's housing market has reached a historic turning point. According to Homes.com data, Houston had the most homes on the market among major U.S. metropolitan areas in October 2025. Over 42,000 homes for sale. Dallas-Fort Worth came in second. Redfin's October 2025 analysis shows that Houston has 44,200 sellers but only 30,895 buyers. That's a 43% seller surplus. This officially means it's a seller's market. The Houston Association of Realtors November 2025 report, published on December 10, 2025, reveals the numbers. 36,620 single-family homes are actively for sale, a 21% increase from last year. Inventory has reached a 5-month level, up from 4.3 months last year. Historical context is important. 4 to 6 months of inventory is considered a balanced market. Houston is now right in that range. But here's the critical difference. Inventory in Austin, Dallas, and San Antonio has tightened since July 2025. In Houston, it has continued to increase month after month. Why? Master planned communities. Houston accounts for more than 1/5 of all master planned home sales in the U.S. New communities are still being built in West and North Houston, despite current interest rates. Homes.com Senior Director Itzir Aguirre explains, even at this interest rate, a significant number of master-planned communities are still emerging, which keeps inventory high. The Houston Association of Realtors November 2025 data marks a historic milestone. The list-to-sale ratio is 92.2%. Buyers are paying, on average, nearly 8% below the asking price. This is the lowest ratio since HAR began keeping electronic records in 2001. Let's examine the figures. The median price fell to $325,000, a 1.5% decline, the 8th consecutive month of decline. The average price rose to $422,552, a 0.8% increase. How can this contradiction be explained? The luxury market. Sales of homes priced at $1 million and above surged by 23.4%. 301 homes were sold in November. This segment represents only 4.7% of the market, but is driving the average up. Sales fell to 6,347 homes, a 2.3% decrease, the first decline since April. But pending sales rose 7.2%. 6,784 homes are under contract. This indicates continued demand. Homes are spending an average of 60 days on the market, 7 days longer than last year. Mortgage rates fell to 6.24%, down from last year's 6.81%, a 0.57-point improvement. HER President Sheikh Qatar said in December 2025, Houston's housing market is settling at a balanced pace. Buyers now have more time, more options, and a little more breathing room to negotiate. Sellers are still receiving offers, but realistic pricing and expectations are changing everything. Christine Janezek moved from Washington, D.C. to Houston. She toured 12 homes in the Cane Island Master Plan community in Katy. She found a home listed at $450,000 that was only 5 years old. In a November 2025 interview with the Houston Chronicle, she said, "It felt like a really good opportunity at the asking price. But I still offered about 10% below, and it was accepted. I was a bit shocked. I didn't even have to meet the asking price to get my dream home in this market." This is not an isolated example. At a recent Keller Williams event, KW Maps coaching Vice President Cody Gibson asked approximately 350 Houston agents, "How many of you cover closing costs for sellers?" Nearly every hand in the room went up. Hard data confirms this. In the first quarter of 2025, 46% of transactions included seller concessions, a 6.2-point increase from last year. Seller concessions are now standard. Full closing costs, mortgage rate reduction, sum up to 1.875% in the first year, roof and plumbing repair credits, title policy coverage. Builder incentives range from $15,000 to $75,000. Which neighborhoods offer the strongest buyer advantage? Galveston is extreme, nearly 17 months of inventory. A balanced market is 4 to 6 months. In Galveston, homes stay on the market for an average of 93 days in West End and 150 days in Tiki Island. Why? Airbnb investors are selling in bulk short-term rental listings jump from 2,300 in 2021 to 4,900 in 2025. Katy Suburbs, Cane Island, Ely Sun Cinco Ranch inventory increased by 43% compared to March 2024. Median prices fell 2.4 to 7.9% annually. Average sale prices down 12%. Dramatic changes in inner loop neighborhoods. Rice Military/Washington Avenue home spent 84 days on the market, up 82.6% from 46 days. Montrose up 42.4%, Upper Kirby up 38.68%, Heights up 23.75%. Where is it still competitive? Bel Air West University, Briar Grove, luxury neighborhoods. Limited inventory and a pool of wealthy buyers maintain the seller's advantage. The Houston housing market split into two different economies, two different sets of rules. The luxury market $1 million and above skyrocketed 23.4% in November 2025. 301 homes sold. River Oaks was named Houston's hottest high-end market, experiencing an 80% sales increase in certain segments. Cash buyers represent nearly 40% of Houston transactions, well above the national average. At the ultra-luxury level, nearly half are paid entirely in cash, according to Sotheby's. In West University, only 3% of Harris County households can afford the median home priced at $1.8 million. Homes spent 35% less time on the market year over year. Bel Air's median price of $1.4 million requires an additional $311,000 in household income. The mid-tier segment, from $250,000 to $999,000, accounts for 72% of all Houston sales. These buyers are dependent on 6.24% mortgage rates and are experiencing full affordability squeeze. Only 40% of Houston households can currently afford a median-priced home, requiring a minimum annual income of $95,200 to $100,400, while Houston's median household income is approximately $64,000. The entry-level market has nearly disappeared. The $100,000 to $99,999 category has collapsed by 19.4%, while the $100,000 to $149,000 category has fallen by 9.4%. Affordable starter homes have been pushed 30 to 45 minutes away from downtown to Conroe, Waller, and the far northeast Houston. Governor Greg Abbott ceremoniously signed 3 housing bills on August 18, 2025. His statement was, "Housing affordability is one of the primary concerns on the minds of Texans today. Fortunately, we have taken major steps to make the American dream a reality." What do the bills do? SB 15 prohibits cities from imposing unreasonable large lot requirements on parcels larger than 5 acres. SB 840 allows mixed use and multifamily development in areas zoned for office, retail, or warehouse use, particularly important given the 24 to 28% office vacancy rates in Texas metros. HB 24 raises the threshold for neighboring property owners to object to zoning changes from 20% to 60%. These laws took effect on September 1, 2025. There's no measurable implementation data specific to Houston. The delay between policy adoption and on-the-ground housing construction means it will take years for any effects to materialize. What happened to Abbott's $51 billion property tax relief package? In June 2025, it raised homestead exemptions from $100,000 to $140,000, promising an average annual savings of $484 for 5.7 million homeowners. Senior/disabled exemptions were raised to $200,000, providing an average savings of $951 for those households. But a Baker Institute analysis found local government tax hikes completely wiped out the property tax relief the Texas legislature provided 2 years ago. Harris County property tax bills increased by about 25% when all taxing entities were included. Houston ISD by 19%, Houston Community College by 15%, the City of Houston by 10%. While campaigning on property tax relief, Abbott has maintained a notable silence on Houston's insurance crisis, despite launching his November 2025 re-election campaign in Houston. Houston homeowners pay an average of $6,610 annually for insurance, the highest among 20 major American metropolitan areas, surpassing even Miami. Harris County premiums rose 19% in 2024 alone, following a 21% increase in 2023, a cumulative 43 to 57% increase over the past decade. Individual stories reveal the crushing burden. One Bel Air homeowner reported a 22% increase in 2023, 39% in 2024, and 78% in 2025. Some residents saw their quotes jump from $2,600 to $8,800 in a single year. High-risk areas are seeing annual quotes of $6,000 to $15,000. The math behind Abbott's tax cut. Ownwell/Texas Comptroller analysis found insurance premiums rose 41% annually, completely erasing property tax savings. In Houston specifically, taxes fell 6.1%, but annual insurance and utility increases pushed total costs up 16.9%. Monthly breakdown for a $315,000 Harris County home. Mortgage 6.2%, 20% down payment is about $1,599. Property insurance is about $551, $6,610 per year. Property taxes are about $525 to $650. Total, about $2,700 to $2,800 monthly. Abbott's tax cut means a monthly savings of approximately $108. The 2024 insurance increase alone added approximately $87 plus per month, before any additional increases in 2025. Why are insurance companies leaving Texas? Four insurance companies left Texas in 2024, directly affecting approximately 11,000 homeowners. Progressive Insurance temporarily stopped writing new policies in September 2024. Foremost Insurance, a Farmer subsidiary, stopped writing and renewing policies in June 2024, weeks before Hurricane Beryl. Farmers Insurance significantly reduced new policies in 2023. Why? Texas experienced $68 billion in disasters over 5 years, the most of any state, causing $108 billion in damage. The state leads the nation in hail events, 878, and tornadoes, 169, in 2024. Home insurers had their worst year in a century in 2023, $15.2 billion in losses, double that of 2022. While Abbott remained silent, other governors took action. Florida Governor Ron DeSantis allocated over $600 million for insurance cost reductions for 2025 to 26, including $590 million for the My Safe Florida Home program, which offers home reinforcement grants. California Governor Gavin Newsom signed bipartisan Fair Plan reforms in October 2025 and issued executive orders directing agencies to develop disaster cost solutions. Abbott's only insurance-related action? He signed SB 1238 in May 2025, ending the widow penalty that prevents insurers from raising rates when a spouse dies. Insurance was not included in Abbott's 18-item list for the 2025 legislative session. Two more high-impact insurance bills passed by the Texas Senate died in a House committee. Lawrence Yun, NAR chief economist, presented his 2026 forecast at the NAR NXT conference in Houston on November 14, 2025. National existing home sales are expected to grow by 14%, and mortgage rates are expected to average around 6%. Yun said Houston is creating more housing construction, making home prices much more affordable. Given job creation, buyers will inevitably come to Houston when mortgage rates fall. HAR expects the market to stabilize by mid-2026. Key factors. Inventory peaked at 39,847 homes in July 2025 and showed slight monthly declines. Pending sales rose 7.2% in November, signaling sustainable demand. Mortgage rates are falling 6.24% versus 6.81% a year ago, improving affordability. Monthly payments for median-priced homes fell by $124 annually. Local agent Tricia Turner, Realty of America, provides context. This is a market we've never seen before. You can't compare it to the 2008 mortgage crash. You can't compare it to COVID. It's none of those. We needed this correction because home prices had gotten out of control. The sky isn't falling. This is the market's current reality. Houston presents an impossible situation. Record inventory, falling prices, improving mortgage rates, and a verified buyer's market. Yet 60% of Houston households cannot afford a median-priced home. The Kinder Institute's 2025 survey revealed that 2/3 of Harris County homeowners reported struggling to cover housing costs. Among those struggling, about 70% cited home or flood insurance as a contributing factor. The gap between what median income can afford and the actual median sales price in Harris County has nearly quadrupled in 5 years. HER chief economist Dr. Ted C. Jones acknowledges, overall affordability is at a 40-year low. The burden falls heaviest on Sunnyside, Fifth Ward, Kashmir Gardens, and parts of East Houston. Residents face 30 to 50% increases in homeownership costs over a decade, mostly in older housing stock and flood-prone areas. Houston's housing market underwent a dramatic transformation to an unprecedented level prior to the 2008 financial crisis. Buyers were using 92.2% list-to-sale ratios and securing discounts of 10% below the asking price, now wield a level of power that did not exist 2 years ago. A median price of $325,000 that has fallen for 8 consecutive months and an average time on market of 60 days create real opportunities for those who can navigate the total cost equation. However, the numbers tell a more complex story than a simple buyer's victory. While Abbott's housing laws await meaningful implementation and property tax breaks are offset by insurance increases, Houston homeowners face average annual premiums of $6,610, turning affordability on paper into practical inaccessibility. The 23.4% surge in the luxury market exists in a different universe from the 60% of households priced out of median-priced homes. The most important insight from the November 2025 data is not the buyer's market itself, but what it reveals. Houston's housing problem has evolved into a comprehensive affordability crisis where insurance costs, property taxes, and mortgage rates create barriers that inventory alone cannot solve, going beyond supply and demand. The 7.2% increase in pending sales indicates buyers are ready, but the question of whether they can actually afford their purchases extends far beyond the asking price on the listing. While Abbott remains silent, Houston homeowners are seeking solutions on their own.